Okay, accounting ones, let's finish up our last little bit of our 2-3 section here. The last type of transaction that could possibly affect your owner's equity account is a withdrawal. A withdrawal is where the owner takes money out of the business to pay him or herself. When we have a withdrawal, again, this is the same type of thing as an expense, in that technically what's happening is you are decreasing owner's equity. So we have to do the opposite for our withdrawal account. Okay, so what we do is we increase a withdrawal with a debit and decrease it with a credit. Okay, because withdrawals technically decrease owner's equity, which we know they increase with a credit, so we have to do the opposite. It's just like an expense. Um, and so, again, the reason why we do this is because we want to keep these types of transactions separate from all the other ones, because you can see we've talked about sales, we've talked about investments, we've talked about expenses, and now we have withdrawals. Those are 4 different types of transactions that would technically all affect the owner's capital account, and that would get really, really full and really, really busy. So we want to keep those things separate. So let's look at that type of transaction. It says that on January 16th, Michael Delgado withdrew equity in the form of cash for $350. So the key word here in that transaction is that we withdrew it. So again, we're going to ask ourselves our first question, which is which accounts are affected. Okay, we have our cash account clearly because cash is identified right here. Remember, accountants are not sneaky, we're pretty specific, so cash. The drawing account, if you were to go back to our very first section and look at your chart of accounts, you will see that we have a Michael Delgado capital and a Michael Delgado drawing account. The drawing account is the one where we talk about withdrawals. You see that drawing withdrawals? That's where we keep track of the money that he has taken out of the business to pay himself. So we have 2 accounts. We've got Michael Delgado drawing and cash. Those are our 2 accounts. We need to think about how is each one classified. We know that cash is an asset. We now know that Michael Delgado drawing is technically an owner's equity account. So again, let's think about how is each of these changed. Well, it says that we withdrew money in the form of cash, so that means that cash is going down or it's decreasing. On the flip side of that, the Michael Delgado drawing account is actually increasing because that's where we keep track of the amount of money that he's taken out of the business. So that account is going up. But you have to think about that as technically the owner's capital account is being decreased, but the drawing account is being increased, as it says down here. And then our fourth thing is to identify, are those going to be debits or credits? Well, since cash is decreasing, we know that that is a credit. And then our Michael Delgado drawing account is a debit. Okay, those are 2 tricky ones, drawing and expenses. They increase with debits, decrease with credits, because they have to be the opposite of our owner's equity account, which increases with a credit and decreases with a debit. So, again, use your cheat sheet. I cannot stress that enough. Practice, practice, practice. It's nice to be able to always go back and check and see how you're doing, but try to do things on your own without always having to look at the PowerPoint or at the book. I know that you can always, it's easy to look here and you can be like, oh yeah, well, cash is credited and drawing is debited. Great, but do you understand why that happens? So try to work your way through it, because this, my children, is only the beginning. We are just getting started. So we have a long way to go from here. So make sure that you get this foundation down. Otherwise, it will be rather difficult for you. So we're going to head over. We're going to do our 2-3 work together in MindTap. And then again, as always, you have your on your own, your application, and your terms and questions to do.